All right, so are you ready to dive into the world of Bitcoin?
Always ready to dive into the deep end, especially with this document you've brought in.
Because today we're unpacking some serious arguments for why Bitcoin could be more than just another flash in the pan.
More than just a fad, right?
Yes, you've given us a lot to think about, particularly the case for Bitcoin as a revolutionary store of value.
And what's fascinating here is how the author connects Bitcoin to the entire history of money itself.
Hmm.
I mean, we're not just talking about some new tech.
Right.
We're talking about what humans value and how that's played out over millennia.
I love that we're going way back to basics because for me, tech only makes sense when I understand the problem it's trying to solve.
Absolutely.
Right.
Yeah.
So let's talk money, or rather, the issue with not having a good system for trading.
Exactly. The author starts with the barter system.
Okay.
I'll trade you 2 cows for that wagon wheel.
Right.
It seems simple enough, but on a larger scale, it just doesn't work.
Yeah, like what if you've got a surplus of cows and nobody wants to trade? You're stuck with a whole lot of mooing and nowhere to go.
Exactly. That's the double coincidence of wants problem. Both parties need to want what the other has at the same time.
Right.
So what did people do? They came up with proto-money. Things like shells, rare stones, even weapons in some cultures.
Okay, so we're talking about early societies choosing specific items for trade, but not because of what those items were, but because of what they represented.
Precisely. And what's interesting is the author points out that it's not just about the object's scarcity, but about the story we attach to it. That shared belief in its value, that's the foundation of any monetary system even today.
So how does a society go from trading shells on a beach to complex financial systems? Is there some secret level-up guide they followed?
Well, the author lays out 4 distinct stages of money.
Okay.
It's a gradual evolution from a simple object to a sophisticated system.
Okay, I'm all about simplifying the complex. Hit me with these stages.
Stage 1 is the collectible phase.
Okay.
Think of those early examples of proto-money shells, beads, tools. They were valued for their beauty, their usefulness, or their scarcity.
Got it. Like trading baseball cards, but with way higher stakes.
Exactly. Now, stage 2 is where things get interesting, the store value phase.
Okay.
This is when something transitions from being just a pretty object to holding its worth over time.
So my limited edition sneakers that I'm too scared to wear, those are a store of value.
Potentially.
Hmm.
But there are other factors at play.
Okay.
For something to be a truly great store of value, it needs to tick a few boxes.
Right. Like what?
Durability gold wins there.
Sure.
Portability, you wouldn't want to lug around a chest of gold to buy groceries, which is where cash comes in.
Right. And good luck paying for your morning coffee with a gold nugget.
Exactly. Divisibility is crucial. And of course, we can't forget about scarcity. Remember those pebbles you mentioned earlier? Not exactly a hot commodity because they're everywhere, right?
Which brings us back to Bitcoin.
Right.
It's designed to be digitally scarce.
Yes.
Only 21 million will ever exist.
Period. And that built-in scarcity is a key part of the argument for Bitcoin as a superior store of value compared to traditional currencies, which can be printed endlessly.
Okay, but holding value is one thing.
Yeah.
Actually using it to buy things is a whole other level. What's stage 3 all about?
Stage 3 is where things really take off. Medium of exchange. This is when you're not just holding on to something hoping it keeps its value. You're using it to buy groceries, pay rent, the works.
So that story about the guy buying 2 pizzas with 10,000 Bitcoins back in the day, back when Bitcoin was practically worthless, that was a perfect example of this stage in action.
Yeah, absolutely. A delicious illustration of Bitcoin transitioning from a store value to a medium of exchange. Of course, back then, those pizzas cost him a few bucks. Today, well, let's just say he's probably hoping he held on to some of those Bitcoin.
Talk about an expensive dinner.
Yeah.
But I can see how that story captures the imagination, right? It's about more than just numbers going up on a screen. It's about the potential of this technology to actually change how we transact.
And that brings us to the final stage, the Holy Grail, unit of account. This is when everything is valued in that currency. Think dollars and cents, but for Bitcoin, it would be Satoshis.
Okay, that feels a long way off though, right? Like I'm not seeing Bitcoin prices at the grocery store just yet.
True, but remember, these transitions take time. The key takeaway here is that understanding these stages of money helps us understand where Bitcoin could be headed. It's not just about today's price. It's about its potential role in the future of finance.
So we've gone from trading shells to Bitcoin in just a few minutes. Quite the journey. But this is the deep dive, and we're going deeper. Because understanding Bitcoin's price history, the booms and busts, that's key to understanding the bigger picture, right?
Absolutely. And that's where things get really interesting. We'll unpack why Bitcoin's wild ride might just be part of a much larger pattern and what that could mean for its future.
All right, so Bitcoin's journey through the stages of money has been anything but smooth sailing, right? Looking at its price chart is enough to give anyone motion sickness.
And that's where the author introduces this concept that I found really insightful. It's called the Gartner hype cycle.
Okay.
And it's this pattern that a lot of new technologies go through, and it maps onto Bitcoin's history surprisingly well.
Okay, so explain it to me like I'm back in Econ 101 and struggling to stay awake.
Oh, right, sure.
What is this hype cycle all about?
So imagine a new technology bursts onto the scene full of promise and potential. Everyone's excited, there's buzz, people are throwing money at it, prices skyrocket.
Mm-hmm.
This is the peak of inflated expectations.
Okay, I'm picturing the dot-com bubble, everyone thinking they're going to get rich quick with these newfangled websites.
The perfect example. But then reality sets in. The tech might not be quite there yet, or it's harder to implement than people thought. Doubts creep in, investors get cold feet, and boom, we crash into the trough of disillusionment.
Ouch. Sounds like a wild ride and not the fun kind.
Right.
So is that it then? The tech just fizzles out?
Not necessarily, and this is where it gets really interesting. Some technologies have what it takes to climb out of that trough, to deliver on at least some of that initial promise. This is the slope of enlightenment.
So it's less about hype and more about actual adoption, real-world use cases proving themselves.
Exactly. And as more people see the potential as the technology matures, we climb the plateau of productivity where the real value is created.
Okay.
Now, here's the kicker. The author argues that Bitcoin has already gone through this entire cycle 4 times.
4 times. Talk about a roller coaster. But it also makes you wonder if history is any indication, what does that mean for Bitcoin's future? Are we headed for another peak?
That's the million Bitcoin question. Now remember, past performance isn't a guarantee of future results, but understanding these cycles helps us put Bitcoin's price swings in context. It's not just random chaos. There's a pattern at play here.
Okay, that makes me feel slightly less like I'm about to step onto a tilt-a-whirl blindfolded.
Yeah.
But tech isn't the only factor driving Bitcoin's future, right? The author also mentions this whole other forced nation-states getting involved.
And that's where things get really interesting.
Fair.
Imagine a country, maybe not the U.S. right away, but think somewhere like El Salvador, or maybe even a country with a less stable currency deciding to add Bitcoin to their national reserves.
That's a bold move. Why would a country do that? To diversify their holdings? Or is it something bigger, a way to push back against the U.S. dollar's dominance?
It could be both. Right now, the U.S. dollar pretty much runs the show when it comes to global finance. But if enough countries start looking for alternatives, Bitcoin's decentralized nature starts to look pretty attractive. Remember, no single entity controls Bitcoin, making it resistant to the kind of manipulation that we see with traditional currencies.
So if a country wants to reduce its reliance on the U.S. dollar, Bitcoin could be a powerful tool, almost like a geopolitical chess move.
Exactly. The author even compares it to what happened in the 1960s when France started demanding gold for their U.S. dollar, which put a strain on the U.S. gold reserves and ultimately contributed to the end of the gold standard. Now imagine countries doing something similar today, but with Bitcoin instead of gold. That's the kind of seismic shift we're talking about.
Wow, a Bitcoin-backed global financial system. That's a pretty radical idea, and certainly not without its critics. The author does bring up some of the common arguments against Bitcoin. It's a bubble, it's too volatile, it's used for illegal activities.
And some of those concerns are valid.
Right.
But I think the author does a good job of picking apart those arguments and reframing the conversation.
Yeah, let's dive into those counter-arguments, because I have definitely heard more than my fair share of Bitcoin is going to zero pronouncements. Okay, so the Bitcoin is a better argument that feels like the oldest one in the book. But the author actually flips the script on that, doesn't he?
He does. He argues that, in a way, all money is a bubble. Think about it. A dollar bill is just a piece of paper.
Right.
Gold has some industrial uses, sure, but its value is largely tied to its historical role as money. The real question isn't, is it a bubble? It's how big can the bubble get and what happens when it pops?
So it's all about belief, a collective agreement that something has value. Suddenly those tulips people were trading back in the Dutch Golden Age don't seem so crazy.
Exactly. It's about shared narratives about trust and how those things influence what we value. And the author makes a compelling case that Bitcoin, with its decentralized nature and limited supply, might just be a better story than the one we're telling ourselves with fiat currency.
But even if you buy that argument, there's still the issue of volatility, right? Bitcoin's price swings can be enough to make even the most seasoned investor a little queasy.
Absolutely. And the author doesn't shy away from that. But here's the thing. What if that volatility, at least in these early stages, is actually a feature, not a bug?
Okay, now you've got my attention. Explain that one.
Think about it. Those wild price swings, they create buzz, they attract attention, they draw in investors and developers. It's like a roller coaster. Some people hate it, but others can't get enough of that adrenaline rush. And that energy, that excitement, it can fuel innovation, it can drive adoption.
So it's about finding those early adopters, the risk takers, who
Yeah,
are willing to ride the wave, even if it means getting wiped out a few times along the way.
exactly. And as Bitcoin matures, as the technology improves, as regulation catches up, we might see those price swings become less dramatic. But by then, it might already have enough momentum to sustain itself.
Okay, so we've addressed the bubble and the volatility. But there's another criticism that comes up a lot, the idea that Bitcoin is primarily used for illegal activities.
Right. And it's true that because of its pseudonymous nature, Bitcoin has been used on the dark web for things like money laundering. But the author makes an important distinction here. Bitcoin is not anonymous, it's pseudonymous.
So there's a digital trail.
Exactly.
Yeah.
Every transaction is recorded on the blockchain, which is like a public ledger. Now, it might not be immediately obvious who's behind those transactions, but law enforcement can and has followed the money trail to catch criminals.
So in a way, Bitcoin's transparency can be a double-edged sword.
Precisely. And the author argues that as regulation increases, as more sophisticated tools are developed to track illicit activity, Bitcoin could actually become less attractive to criminals over time.
Interesting. It's almost like we're seeing a kind of evolution here, both in terms of the technology itself and our understanding of how it can be used for good or for bad.
And that's what makes this whole conversation so fascinating. We're not just talking about some newfangled tech gadget here. We're talking about the future of money, about power, about how we organize ourselves as a society.
Big questions, for sure. And we've only just scratched the surface. But that's the beauty of a deep dive, isn't it?
Yeah.
It's about going beyond the headlines and really grappling with the complexities.
Absolutely. And whether you're a Bitcoin enthusiast and a skeptic or just curious about the future of finance, this is a conversation that's worth having.
Couldn't agree more. So until next time, keep exploring those big ideas. And remember, the future is waiting to be written.